Computer. Alrighty. So is there anyone here who's brand new to futures or brand new to trading that has never ever traded in the past? Brand new. You just either type it in the chat window, or you can feel free to unmute and say something. If you raise your hand, I probably won't say it, but feel free to type it in if you're brand new to trading. You may not even know what a candlestick chart is. So anyone brand new. Okay. So we're going to approach this as though you've done some trading in the past. Is there anyone who's never traded futures ever? Has anyone never traded futures? Just type it in if you've never traded futures. Okay, doing
I've
something.
never traded futures.
Okay. Let's go over a little bit about futures really fast to give you just a feel for why we trade futures over other things. All right. With futures, you can be very exact. And that's one of the main things we like about trading futures is the exactness of it. You know exactly how much you can estimate pretty closely how much you can make and lose every year. You have exact entries, exits. And when I say estimate how much you can make and lose every year, that's assuming you are trading a plan with expected wins and losses and you are following rules. If you're just sort of winging it, then you have no idea what's going to happen. But if you are following rules, you have managed risk, you know, if you risk this much and you lose this much on each trade, then after so many trades, you're going to be making money. And you can plan ahead for that. And we will go over that in more detail as we go along. Let you know, go ahead and have a calculator nearby, something, because I'll be asking you to do a little bit of math along the way. Some real simple math, but I will be asking you to do some calculation. So have some kind of calculator ready and available. And let's take a look on my account here, and we'll take a look at some futures charts, and they'll give you a feel for numbers involved and why we do futures over other things. I'm going to change the share from the handout to, let's see, here it is. Okay. This is the Schwab account, and this is the futures section showing the different types of futures available. Okay. And here is a big reason we trade futures, and in particular, micro futures. Micro futures is huge now. Index futures. When we traded index futures, we got really, really, really good at trading index futures. This was in 2006, 7, 8. And margin at that time to buy one contract of, let's say, the S&P futures, the ES, or the NASDAQ, one contract, you might have put up maybe $3,000 in margin just to open one contract. So you had to have $3,000 in your account just to trade one contract, okay? This was in 2006, 7, 8 timeframe. So not a big deal. If we look at it now, ES, you have to have $14,000 in your account just to open one contract of the ES, just to even trade one contract. If you want to trade 3 contracts, you have to have about $45,000 in your account just to trade 3 contracts, okay? And let's take a look at the NASDAQ. These are the NQ. $22,000 needed just to open one contract and trade one contract. 2 or 3 contracts, $44,000, $66,000 in the account. So that's how we got margined out of futures a long time ago. That's why we had switched over to Forex and options. And then a few years back, around 2019, came the micro futures. They might have existed briefly, but then they weren't there. Here are the micro futures. It's 1/10 the size of the full-size contract. So the NASDAQ might be full-size contract, $22,000 to trade one contract, but the micro is only $2,000 to trade one contract. So having a micro futures gives smaller dollar traders a great opportunity to participate in the futures market without needing to have massive accounts, which the reality is most traders have a $20,000 to $50,000 trading account, $20,000 to $50,000 trading account. Most average retail traders don't have $250,000 to $500,000 trading account. That's just not reality. But the micro futures allows regular people to be able to trade and participate in the currency markets and other futures markets because of the micros. So it's great to have them available and workable. So here are the Dow, NASDAQ, and S&P micro futures, and this one is for the Russell. We trade all of these. But today we're going to be focusing on what is really our bread and butter. Our most regular profitable thing we do are the currency futures. Okay. We trade the Australian dollar, British pound. We trade the euro, and we trade the Swiss franc. Okay. And Canadian dollar, because I didn't say that. That's what we trade. Notice the Aussie dollar, $1,700 margin for one full-size contract. And we have the micro, 1/10 the size, $176 margin. Okay. This is why even people with maybe a $5,000 to $10,000 account can trade quite effectively. Swing trading, we do not day trade. There's no looking at 5-minute time frames, 1-hour time frames. This is not day trading. This is swing trading. Okay. So this is why any size trader can trade the currency futures, micro accounts, and make it work for them if they're following certain rules. Okay. Along the way, ask any questions you want. Any questions you want. Feel free to type it in or just unmute and go ahead and ask. And I know someone asked about this previously. We also have crypto futures. And we have, if you have big dollars, full-size contract, $130,000 in your account just to open one contract. But now they have the micro contracts. All right, so just to open one contract, $130,000, but we have the micro contracts, just a fraction of the size, and you can still participate in crypto futures with a more reasonable size trades at account size. So there are options out there for you if you want to swing trade. See, someone's trying to call me. I'm going to go ahead and I'll have to call you back. I'm in a meeting. Okay, so that's that. I saw the thing there was actually my tax lady. I have an appointment this coming week. They're probably calling me and telling me, hey, be ready to bring in your taxes. All right, so today we're going to focus on currency futures. And in particular, for most people, we'll be thinking about the micro futures. And let's take a look at the contract spec. We're going to be looking at two currencies, the Canadian dollar and Australian dollar. And one of the strategies we use to trade those. Aussie dollar, what we look at is 4 decimal places. So this has 5 decimal places. It says $5 a tick. Well, we're only looking at 4 decimal places. This would be 0.0001 would be the first. So this would be our first number we're looking at, 4 decimal places only. So that would be $10 for one. So if it went from 0.0001 to 0.0002, that would be incrementing 1 tick, and that would be $10. Now we're looking at the micro. So if it went from 0.0001 to 0.002, it would be increasing by $1. If it went from 0.0001 to 0.0003, it would increase by $2. Every tick increment for decimal places is $1. So we're looking at Aussie, and it's going to be real easy to do the calculations because every increment is $1. Same thing with Canadian dollar. Every tick increment is going to be $1. Different currencies like the euro, one increment, one tick is $1.25. On the British pound, one tick is 62.5 cents. So different currencies, tick values are different, right? So, but we're going to be focusing today on Canadian dollar and Aussie, where each tick increment is equal to $1. And you're going to be doing some calculations about the risk and stop sizes along the way. But keep in mind, one tick is $1. It will come back up as one of the things we look at. All right, I'm going to switch from this now. Remember, along the way, any questions you have, feel free to ask anything you want. All right, so I'm going to switch over to back to the handout for a moment. Share. Okay. So these are all the futures which we trade and nothing else. Australian dollar, British pound, Canadian dollar, euro, S&P, NASDAQ, Russell, Swiss franc, and the Dow futures OIM. For today, we'll be focusing on currencies. I'm focusing on currencies because they are the absolute most profitable thing we do. It doesn't matter what year, market conditions, as long as you're consistent with your trading, you can have a very, very, very nice annual returns on your trading. And we're going to go through several years worth of trades so you can see how money is made and lost and the reality of what to expect. If trading isn't always what you envision or how you envision it, but if you have a big picture view of your trading, not just what happened this week or this month, but if you understand the big picture outlook and what to expect, then you can get through the good times and the bad times and come out the other side. It's more of a mental thing than anything else. But if you understand what to expect, so when you have losses, you don't panic. It's like losses happen as part of trading. But if you understand how the big picture is, then you just keep trading and numbers will sort of work themselves out. All right. Seeing who's in the meetup right now. Who's in here? Okay. All right. So this is a strategy we have not shown at a meetup before, and it involves trend lines. Now, the downside about trend lines, the way most people do it, is that if 10 people looked at the same chart and drew trend lines on it, you would have 10 different sets of trend lines drawn in 10 different places, okay? What we've been doing, myself and Becky have been doing for a long time, is we've been trading with trend lines, but we use 100% objective methodology of where and how to draw the trend lines. So that if 10 people looked at the same chart and drew the same trend and drew the trend lines on it, all 10 people would draw the exact same trend line. If we can't do something in trading for technical analysis where 100 people cannot look at the exact same chart with the same analysis and come up with the exact same outcome, we don't do it. We don't do any of that looks like, feels like, that type of stuff. Everything has to be repeatable or else you have nothing that you can build on. So we need to know that anything we do has an expectation of profitability and a certain level of profitability. And with futures, that's really easy to do. With options, it's not so easy because you don't really know how much you're going to make with options. With futures, you know exactly how much you're going to make. You know exactly how much you're going to lose. So options are great to do certain things, but futures are perfect for short-term trading where precision is key. All right. So this is one of the strategies, and I'm going to switch over to the chart, and then we're going to go through it in a little more detail. You have a handout, and the handout is a visual example, but I want to look at it on the actual chart, so I'm going to change my share to go to the chart now, and we're going to be looking at Australian dollar. Okay. So The dotted line is a Bollinger Band, the upper Bollinger Band. All right. Regular candles, open, high, low, and close as regular standard candlesticks. This is the squeeze indicator. There's an RMO indicator. We will use the squeeze indicator as a confirmation, but it's all about everything up here. This line you see drawn is a moving average off a linear regression line. If you want to know what a linear regression line, Google it. It's a mathematical concept. It's pretty straightforward, and you will find it on just about every trading platform and also a charting platform, linear regression line. This is a moving average of the linear regression line. How we do all of our futures trading involves three methodologies. One is trend lines. One is a close above or below a certain level. What I mean by that, the market goes up, pulls back, and then continues higher above that previous swing high, and we take a trade, or just the opposite, the market goes down, goes up, and then comes down again below that previous swing low. That's how we trade futures. And as a two methodology, the third one is we have a bigger time frame. Let's say there's a bullish move happening in one time frame, and within that time frame, on a smaller time frame, there's a pullback and a snapback into the bigger trend. Those are the three types of trading we do for futures. This particular one is trend lines. So I'm going to show you how we go about doing this with this particular strategy. Like I said, the line is a linear regression. It's a moving average of a linear regression line. We have several versions of this for different strategies, but the concept is all the same. All right, so what we're looking for is the market to make a big move up, hitting at least a couple of standard deviations, okay? After a couple of standard deviations, we look for the market to pull back. So the upper Bollinger Band is usually a good point where the market's extended and then pulls back. Got a question? We'll talk about that in a little bit. I think you've seen some of that in the past, but we're going to go through that in detail, Roz. And Olga, what is the strategy for the snapback? What is the strategy for the snapback? It's the stochastics. It's the squeeze play. The squeeze play strategies that we added, Olga, the squeeze play strategies that we added for both futures and for options, squeeze play. Those are the snapback ones. I think you have those, but you may not have had them in the last month. So Olga, you may not have had those in the last month. Not sure you do, but it's the squeeze play for the options, and it's a squeeze play for the futures. Those are the snapback ones. All right. So it touches upper Bollinger Band, and then it pulls back. Here is what we look for. It pulls back, increases in value, and then decreases. The line comes down, hooks upward, and then hooks downward. Okay? So we're looking for this price to touch the upper Bollinger Band, this line to come down, hook upward and form a V. Once we get this hook upward and form a V, now we can have a place to draw a trend line. We look for the previous V. Here's the previous V. And I can draw a line from here to there. So up until touches the upper Bollinger Band, comes down and has to form a V. So we'd be looking to draw a trend line from this point upward, not downward, but upward to the next bottom of the next V. This day, there's no V yet. There's no V any place here yet, no V. No place to draw a trend line. I go forward one day. There's no V yet. There's nothing, there's no trend line to draw because I need a V. I need to know where this turns up. Hey, I have a V. Now I have the ability to draw a trend line. So now I actually have the ability to draw a trend line to right there. Okay, once I have that V, I can draw a trend line. Now what I'm looking for is a close below this trend line. This day, it closed above the trend line. I go forward one more day, boom. That's what I'm looking for, close below that trend line. So it touched the upper Bollinger Band, line came down and then formed a V, and that is my trade signal, okay? That's my trade signal right there. When I see this signal, I know that if I get filled on this trade, this is going to be a bearish trade going down. I now have a 90 something percent, I think like 92% of these trades are winners on Aussie dollar short. Okay. Got a few people who came in. Becky, can you put the link in the chat window again for the new people for the handout and for the recording also? I had a question. What? To Craig, for this particular one, I believe it's a 5-period linear regression line, 5-period, and a moving average of that. Different strategies have different moving averages and different periods for the linear regression line. All right, so my entry for this, now let's take this as a trade. This is what I see. Now I want to capitalize on this. My target for this will be based on the average true range, the ATR. If I look in a data box over here, this is NinjaTrader. This is a data box of everything that's on the chart. The ATR is 0.0066, and we're looking at 4 decimal places. That is 66 ticks. So I'm going to type it in. ATR equals 0.0066 on that signal day. I call this the signal day, the day I get a trade signal, okay? And I'm typing this to, I just typed that in the data box. The ATR on this day is 0.0066, that's 66 ticks. And my target, my first profit target for this will be 60% of that. And ATR is average true range. Average true range is a measure of volatility of the underlying product which we're looking at. In our case, we use a 5-period ATR. It's telling me that on average, every 5 days, Australian dollar is moving 66 ticks. On average, every 5 days, Australian dollar is moving 66 ticks. That's the ATR, that's the average true range. It doesn't matter what you're looking at, everything has an ATR. And we're going to base our first profit target on how much this moves. The bigger a target you use, the lower the probability it will be reached before it moves the other way and hits your stop loss. Anything we do has to have an 80% or higher win rate, meaning 80% of the time or higher, our first target will be reached before our stop loss is reached. Okay, so that's pretty standard. Okay, our entry for this trade is going to be 10 ticks under the low. If the low is 0.6692, as I seen a data, here's a data box right here. The low of that day is 0.6692. What is 10 ticks below that value? Please type it in. What's the price 10 ticks below that value? Price 10 ticks below that value is what? Someone type in that number. 0.6682. Thank you, Ruben. Now you know our entry price. So and entry equals 0.6692.
Sorry,
Entry price.
Eversley,
Yeah.
why are you using the 10? Where'd the 10 come from?
Say that again.
Where did the 10 come from? You said I'm gonna subtract 10 from this.
Oh.
Where did that come from?
And don't raise your hand, just go ahead and unmute. I will probably not see the hand raise, but so just feel free to unmute and ask a question. We go short if and only if a market is actually going down. And we go long if and only if the market is going up. So the market has to show that it's going lower for us to enter a trade short. So we're going to do a sell stop to get into the short trade. And after much research, you'll find different people have this type of strategy. There's a certain point where if I had said like, okay, let's get in 3 ticks under the low, you'll find that gets faked out quite often. You go 3 ticks under the low and then reverse. 10 ticks under the low or 15 ticks under the low, 20 ticks for like British pound usually, because it's much more volatile, is a point where we see enough commitment in the downside movement to feel confident enough to get into the trade short. Similarly, if we were going long on a trade, it has to move up an adequate amount for us to feel comfortable enough that it's going to continue going higher, not just go above the high, stop people out. And the pros know where people put their stops, and they can stop people out and mess with people and take their money. So it has to be not just a tick or two below the low just to fake people out and reverse. It has to go low enough so that we have an 80-something% confidence it's going to continue going lower. And 10 or 15 ticks is usually what we use for most of our currency futures strategies. So that's where the 10 comes from. And that's from a lot of hours doing research on what value to use for buy and sell stops. Another person I know has a 40-tick sell stop because this person wants true commitment. It's going lower, and they have a 40-tick sell stop or 40-tick buy stop. So for ours, it's going to be 10. All right. So we're going to get in, and we're going to put our stop loss 10 ticks above the high of the last 2 days. It may also be a percentage of the ATR. In this case, we're going to put the stop loss 10 ticks above the high of the last 2 days. So the high is 0.6749, and the high the other day is also 0.6749. So what's 10 ticks above the high of the last 2 days if the high is 0.6749? Should be an easy one. What's the high of stop loss? And equals 0.6759. 10 ticks above 0.6 high equals, and the stop 0.6759. So just on this alone, we have more information than a lot of traders even have when they start trading futures. Okay, so now we know the entry price and we know the stop loss. We know the entry price is 10 ticks under the low. We know the stop loss is 10 ticks above the high. Okay, so what is our risk on this trade? What's the difference between the entry and the stop loss price? If our entry price is 0.6692 and our stop loss is 0.6759, what's the difference between 0.6659 and 0.6692? So I'm going to do that math. 0.6759 minus 0.6692. How many ticks is that? I have two values. So we know it. So it's 0.6659 point is 0.6692. Is it let me get this right here. 0.6759. Okay. 0.6759 minus 0.6692. Okay. 67. So 67 ticks is our stop loss. And remember how many dollars and cents is each tick worth? Remember that number, type it in. What's each tick worth? $1. So if we're trading one micro contract and we have a full stop out, a full loss, we are going to lose $67. It's 67 ticks, each tick is $1. If we take a full loss on this trade, we will lose $67 on each contract. Okay. I like to use the number $1,000 for math and calculation purpose because it's easy to calculate. If it's $67 a contract and we want to risk $1,000, how many contracts can we buy? So that would be 1,000 divided by 67. What number is that? What's 1,000 divided by 67? 14.92. Let's go ahead and round it to 15. Let's make it 15. So 15 contracts. Now 15 contracts. I'll round it to 14.92 to 15. That keeps it around 1,000. It's never going to be exact. If you want to risk 1,000 a trade, it'll never be exactly 1,000. It's going to be plus or minus, okay? But we use 1,000 for our calculations, and you'll see it in an example we give a little while in a little bit. Okay, now let's get the exact number now. $67 per contract times 15 contracts. What's our actual dollar risk? 1,005. Okay. So with 15 contracts, we're risking $1,005 plus commissions. Depending on what deal, the commissions can vary significantly depending on what deal you have, very significantly. It can be literally from pennies to dollars to $2, $3 a contract, depending on what deal you have for commission. So I've seen it vary quite a bit. So it all kind of also depends on how many contracts you trade each month or each year or whatever. And what you can convince your broker to give you a deal with. But there's never one price for everyone. You make your own deals for how much you pay per contract. All right, so a little over $1,000, so we're pretty much right there. All right, when we place this trade, we now have more information than probably 90-something% of futures traders have when they place a trade. We have an entry, we have a stop loss, we have our risk established. Okay. Now let's get our first target. We're going to take 60% of the ATR. The ATR was 0.66. What is 60% of 0.66? .39. Okay. 0.0039. First target is 60% ATR, and the ATR is, so that's going to be 39 ticks. Okay. How much dollars is that? $1 per tick. Making the math real easy now. $39, exactly. So now if you take a full loss is $67. Was it 67 for full loss? Was that right? Or was it some other value? Okay, the full loss based upon 10 ticks above was $67. What is 0.39 over divided by, or what is 39 divided by 67? Let's get a percentage return. 39 divided by 67 is what? So that would be a 58% return. This can vary depending on how we do targets. It can vary from 25 to 30% return up to 50-something% return. It depends on the situation. For some targets, we do the 40, 45, 50% thing some of you are familiar with. And for others, we do ATR and 1 point something times the ATR. It varies. Or it could be certain ticks above the previous day's highs or lows, or it could be a percentage of the ATR. So different strategies have different stop losses, but I want to give you the concept, the approach of what we're doing, because it's going to be applicable to most of the future strategies we do, but I want you to get a feel for how we do the numbers, how it comes about. So this would be if we hit our first target, that would be a 58% return on our money, okay? So, and we calculated our first, we had 15 contracts. Let's say we have 15 contracts. We're risking $1,000 with $1,004, $1,005 with 15 contracts. And we place the order. So here's the order now. Sell stop. Sell stop. It'll be a 1 order triggers an OCO order. So sell stop 15 contracts, 10 ticks below this low. So sell stop 15 contracts at 0.6682. If that fills, it has to go, the market has to go down at least 10 ticks to fill the order. And we give it 2 days to fill the order. If the order is not filled in 2 days, we cancel it. There's a time factor in here too. If we don't get into this trade within 2 days, we cancel the order because the market is not doing what we expect. We cancel the order because the market's not doing what we expect. All right. So the order does get filled within 2 days. So we have entry, sell stop 10 ticks below the low, 0.6682, excuse me. Correct, Olga, 0.6682 is the entry. So it goes down 2 days. The next day, there's nothing. 2 days later, it goes down and fills me. And when this gets filled, it automatically triggers a 1 cancels other bracket order, which will have the stop loss 10 ticks above the high and our first target, which is going to be 39 ticks below the entry. So if our entry is 0.6682, what's our first target? 39 ticks below that is what? 0.6682 minus 0.0039 equals what? 0.6643. Okay. .6643. First target. Okay. So back to here, the order entry, sell stop, 15 contracts at 0.6682. It gets triggered 2 days later. When it's triggered, it activates the OCO bracket order. And that one cancels other bracket order. It says the stop loss is at 0.6759 and our first target is at 0.6643. Okay, going forward, that first target is hit 1, 2, 3, 4 days after you place the trade. During these days, there's nothing for you to do. You got the trade valid on this day. It takes you a couple of minutes to place the order, and then you go live your life. There is nothing for you to do at all, at all, at all. If the trade had not been filled by this day, then you cancel the order. But it was filled, nothing for you to do. It's all automated. Your stop loss is in, your first target is in. 2 days, couple days later, your target's hit. So far, you've done nothing but enter your order. And okay, this is what we evolved to, this type of trading. When we started like everyone else. We're there with intraday charts, looking at minute by minute on. We evolved past that. We're well past that. Like any other job, you start out doing the day-to-day, all the hard work, and over time you get more of a manager or supervisor, CEO viewpoint. We're at the CEO level now. We just let the market work for us. We just put everything in play, sit back. You have a comment? I saw someone unmute. Okay. Can you repeat how you place the OCO order?
If this is Milind, I
Yeah,
have a question.
yeah,
One question is, our entry was 6682, which
yeah,
is this particular candle that you are showing,
yeah,
and we placed the sell order
yes.
and
Sell stop.
sell stop,
Yeah,
and it with the first target is, you said 6643,
yes,
correct?
yes,
Which occurred on the fourth day. Is that right?
yes.
Okay, okay. So we have to wait till 4 days to see if the price movement is happening accordingly. Otherwise, we need to cancel the trade.
You have to wait. No, you have to. The only cancellation of the trade is to get into the position in the first place. Once we place the order, okay, this day is now over.
Correct.
Sometime during this day, preferably sooner than later, we place our order. We want to see that order filled either this day or this day.
Oh, okay, okay, okay.
If
So
that
the order
yeah,
gets placed on the on the green on that
yes,
particular day. Okay,
yes.
okay, okay, okay.
But if it's not filled by this day, cancel it. It's not
Oh,
doing what we expect.
okay, okay, okay.
But once we place the order, if it's filled,
Yeah,
if we want to do nothing but the first target, there's nothing else to do.
correct.
If you want to be someone that takes part of the order off at the first target and manage remaining positions, that type of thing, that's your choice. That requires more time, work, and effort.
Correct.
The reality is, here's what the reality I found. We have busy lives and we do other things. And most of us don't want to get bogged down with managing positions from day to day and then lose track of things. It's easier to take your 30, 40, 50 something percent money return and then walk away.
Yep.
It's just easier. Some people I know like to do all that day-to-day management. That's okay too. There's nothing wrong with that. But I like it simple. It's nice to be able to say you cut a big trending trade, but when you do all pluses and minuses, was it really worth the time and effort if you look back on it? 50-50,
Yeah.
it could work out either way. All right. So let's do some calculations now. We have 15 contracts and they each got 39 ticks of profit. That was $39 for one contract, right? What's 15 times 39? That's how much money you just made, assuming you're going all in, all out. Okay, so Ruben, we made $585. We were risking of what, $1,004, $1,005. What's 15? What's 585 divided by 1,005? 585 over 1,005. 58%. That's it. That's straightforward, the 58% return. Like I said, the way we trade, the different strategies will vary. We give you stats for a 40% return, a 45% return, a 50% return. Some will be less, some will be more. And then you make decisions. We provide you the objective information of our strategy. We provide you the information. Here are the win-loss stats at 40% return. Here's the win-loss of the 45% return at the first target. We give you everything at the first target. You make a decision what works for you. I'm more conservative. I will go for the higher percentage one. I'd rather take fewer losses. But remember, this is just first target. You want more beyond that? That's up to you to do. So let me do some. So this is how all the math is. I can show you 10 different examples. It's all the exact same math, okay? Basically, it's all the same math for this strategy. So I'm just going to scroll randomly, stop, okay? Let's take a look. Okay. Market touches up a Bollinger Band, pulls back, forms a V. You're always looking for this same type of pattern. Market goes up, forms a V. All right, let's take a look at this one right here. Market went up, formed a V right there. And I'll show you how we use our confirmation. There's a V. There's a close below on this day. But it has to be, for our strategies, it has to be a down day. There's an up day. We would not take this trade because it's an up day. For our future strategies, it has to be an up day for a long, a down day for a short.
So obviously, you consider just a one-day reversal of V?
We don't, say that again?
So in that example you just showed, it looked like a one-day reversal in trend. And
we don't know what's going to happen in the market. It could drop for the next 2 months.
Right.
We're looking for technical setup. Let's do the next one. Up to upper Bollinger Band. Pulls back, forms a V. We draw a line. That's our trade. There. You put in your sell stop, fill 2 days later. Upper Bollinger Band, pulls back, forms a V. Take a look at this. This is our trade. It is not filled within 2 days. Cancel the order. We put in our sell stop 10 ticks below the low. Not filled, we cancel the order. We have different strategies that will get us in along here, not this one. That's why we trade a grouping of strategies, not just one particular strategy. No one strategy can get you into every trade all the time, okay? There's another one, I think I might have put this one in the examples in the handout. Upper Bollinger Band comes down, forms a V. So this is what we see. Upper Bollinger Band comes down, there's no V, so there's nothing. Next day, no V, there's nothing. No V, there's nothing. No V, there's nothing. Hey, we formed a V. Now, each day I'm looking. This is now in the back of my mind every day. I'm not drawing a line yet. Some people draw the line. I'm just looking. I see, because I know now to look for something. So next day, I look for a trade. Nope, I don't have to draw it. I'm literally just looking in my own mind. I can see a line from here to there. There's nothing to close. There's nothing close, nothing to consider, nothing to think about. So, but I'm aware that I might potentially have something. Hey, now we got something. Draw the line. That's our close below. The squeeze decreasing. This momentum is my confirmation. I go through the same calculations I did before, exact same calculations, and you place your trade, It gets filled the very next day, targets hit within 1 to 3 days. And this one is one of the bigger trades that keeps going. So if you were someone who was taking part of the position off and trailing the stop's remaining contract, you might catch a bigger move. If you're all in, all out of the first target, there it is. Can you explain the ATR again? Okay, on this day, the ATR, if you take a look at the data box, on this day, the ATR is 0.0077. That's 77 ticks. If we were talking stock market, it would be dollars and cents. Okay. Let's just, you know, I'm gonna pull up, switch from this to an op to ETF, take DIA. Okay, this is the Dow, diamonds. ATR is 3.67. That means every 5 days on average, the Dow is moving 3.67 points. DIA. If you're looking at a big index, we're talking 367 points. Okay. That's all it is. On average, every 5 days is moving that many points. I'm gonna go back to Australian dollar. Now we do all of our futures analysis on NinjaTrader. We trade wherever you want to trade, but the analysis we do on NinjaTrader. In this example, how did you determine the stop loss? The stop loss is always the same. Olga, it's either, and you have the plan for that too. It's always either 10 ticks above the previous, against the high of the last 2 days, or 1 point something times the ATR. Usually whichever one it calls for in the plan is either 1 point something times the ATR or 10 ticks above the high of the last 2 days for a short, or 1 point something times the ATR or 10 ticks below the low of the last 2 days. It's pretty much our standard stop losses. And then from that, we can do our same calculations for the risk and how many contracts. Coming back a little bit here. And it always has to be drawn upward, the trend line. So touch upper Bollinger Band, comes down, forms a V. Here's the previous V. And here's our trade right here. This is on 10/2/23. The trend line has to be drawn upward. For the short, it has to be drawn upward. For a long trade, trend lines have to be drawn downward. Okay.
In this example, that trade would not have been executed, right?
This one,
Yeah.
why not? What's your thought process?
Okay, so I'm looking at the trend line, I'm looking at the next candle the next day, I'm
Yeah.
looking at the bottom, then I'm saying, okay, well, I want to be trading that if it goes 10 points below that point, and the next day it actually went up.
Are we looking?
10
Okay,
2.
this is 10/2.
Yeah,
Why?
isn't that
Okay, what are you seeing that makes you think it went up the next day?
a green bar 2 days from them? So what day do I execute the trade?
You execute the trade the very next day. So if this is, okay, so you got your trade signal here, this day is over, okay? So here is when you got your trade signal, the close below the trend line, right?
Right.
So now this is the known. What happens after that is not known. What's the low of this day? 0.6379, right? So our entry is going to be 0.6369, 10 ticks below. So when we put our sell stop, the next day is not known yet. We're going to place our order to enter at 0.6369. The next day, it dropped. It went down lower than 0.6369, filled us, and probably hit our target.
Okay, I was 1 day off. Okay.
Yeah, I think you were looking back here somewhere.
Yeah, I was thinking that's that day that it executed was the day we placed the trade.
Yeah, you placed the trade this day. This is the day you placed the trade.
Okay, and you didn't know the final output.
No. Now this happens at The market closes at 2 p.m. Pacific time, reopens at 3 p.m. Pacific time. The closer you do your review and place the orders is better to in the afternoon. Usually these markets don't move until probably after 6 p.m. Pacific. The reality is between 3 p.m. Pacific and 6 p.m. Pacific, the world markets is nighttime. The world is not really open yet. As you get into the evening, Aussie opens, the Australian markets open, the Asian markets open, and there becomes a lot more action and price action going on. So those hours in the afternoon, you have a chance to get your trades in. The market will be like waffling around for a little while because most world markets are closed or evening. Very little, action going on. Not till a couple hours later, all the world markets start opening again, and so a lot of the action happens in our overnight hours, a lot, because all the markets are open around the world during our overnight. Since
And
it's a
then just so
22-hour
I
market.
understand, so then if we executed on that 10-2,
Yeah. Well, you can't execute on. This is when we have the trade valid 2 p.m. on that day. On 2 p.m. Pacific time on 10-2, we can get our trade signal. You do your analysis after 2 p.m. Pacific.
right, and then we place that order on 10-3, let's say.
Sometime after 3 p.m. Pacific, which is really the 10-2. 10-3, 10-2 and 10-3, the beginning of 10-3 is the same afternoon as the close of 10-2. Understand that? There's only a 1 hour difference between this close and this open. So let's see, this should be Monday afternoon, and the open is Monday afternoon. It closes on Tuesday afternoon. So this will close at 2 p.m. on Monday, and this will open at 3 p.m. on Monday Pacific time. So sometime after 3 p.m. on Monday Pacific time is when you want to get this trade placed.
I see. And so in that example, you're envisioning that the trade would have made its profit in that very same day rather than
Yes,
not executing and losing money.
correct. So you don't want to screw around too much with the futures with time and putting it off, because I had someone doing that and they wouldn't get to their trades till a day or two later and it's already over. And you can't do that. This is short-term, fast movement, grab money, grab money, grab money. And when you look at it from a big point of view, this is not a really big move we're looking for. So it can happen like that. A lot of these trades, the trade's over within 1 to 5 days. With option strategies, the trades might be on for a week to 5 weeks to 2 months. With the futures trade, these are quick moves usually, where you're out within 1 to 5 days. This one, you grab your money within 1 day. That's a 40, 30, 40, 50 something % return on your risk capital in 1 day, and you're out. You move on. Next trade. So with the futures, you just book profits when they come up. We don't have like 15, 20, 30 trades a month. We don't have as many trades. We'll go through that in a little bit, but we can book serious profits with fewer trades because it's the percentage return versus the number of losses is spectacular. From Olga. What's confusing is in the first example, you wait for the next V, the example you drew once you see once you see the V form, in the back of your mind each day, you're looking, I don't draw a line, just leave them laying there. So take this out. I don't even think about a line. Unless I see it happen, I don't think about it. I look, hey, I look back, I said it might be a trend line here. Let me see. I saw a V and I saw a V and I saw it come down. Okay, I'm like, yeah, I have a trend line. When you do this every day, this is just stuff you see, because the strategy, you're looking for it every day. You know you're looking. Let's take this out of here. scroll randomly. I'm just pick the random stopping point. Let's say here. I see up a Bollinger Band, it came down and formed a V there. I'm gonna look over to my left and see that once I see a V form and I see a down day that might close below that V or anything that might close, I just automatically look to the left and I see, hey, it looks like this is a formed a V. Some people will draw the line and leave it there. That's okay. I personally don't need to draw the line. I literally see it I can see it in my sleep. It just, but if some people will do that and they'll draw this line there and say, okay, let's see what comes up in the next couple of days. And if you do that, great, because it gives you the next day you look at the chart, the line will still be there. And the next day you go, hey, wait a second, we closed below it. Right away, confirmed, valid trade. Cha-ching. This is a moneymaker trade. All right. That's straightforward. That's why I really like this trade setup for shorting futures. Like I said, this is one of a grouping of 10 plus strategies, but it works extremely, extremely well. I know I was in the middle of answering a question. Is there still a question there on this? Were they able to answer your question already? All right. So this just happens over and over and over again, this particular, and I think I mentioned Canadian dollars and look, it's the exact same thing, same calculations. And I go like, hey, it formed a V, but if I drew a line, there's no confirmation. Hey, it formed a V, but the previous one is higher. If I drew a trend line from the previous V to that one, I'm going the wrong direction. It's not, for a short, it has to be going up from the previous one. From here, that would be a valid signal right there, but it's not confirmed with the squeeze, so I pass. We always have a confirmation setup trigger and trade management terminology from Jake Bernstein. Setup trigger trade management. Setup is visually what you look for. Here we go. So here's our setup, touches, forms a V. And I draw my line. And we close below on this day. That's our trade right there. The day we closed below, we formed a V, drew the line, closed below. And I have a trade signal. I take my trade, nice short. It took 1, 2, 3, at least 3 days or more for the target to get reached, and then it just kept dropping. All right. So I'm gonna go, let's see, a question. We are not doing a bullish example. There is no bullish example for this short strategy. This long strategies are completely different strategies, completely different everything. So for this, what we're doing today is a short strategy only. This is not used for longs. This does not work on the long side. You can't just flip it around and make it work in a long side. Trading long and short is not the same. People who try to do that lose all their money and they don't realize why. One, just because something works long doesn't mean it works short. Markets do not move the same way long as they do on the short side. This one is great for short strategies. A long strategy would be a completely different meetup and completely different type of deal. Same concept, same concepts, but totally different strategy. But same concepts.
A couple of quick questions.
Yeah.
Quick question. So this strategy can work on any trading platform, right? I think right now you're showing Ninja Trader, but if somebody has Interactive Broker, they can make the same setup and do it.
For this particular strategy, if you have access to, and you are able to access the linear regression line, and you have the ability to program up a moving average of that line, then yes.
Okay.
If you don't have the ability to program a moving average of that line, then no. You have to have the appropriate tools to do the analysis. I know a lot of people that try to use a generic broker's platform to trade futures and stuff, and it can't do it.
Okay.
So this is NinjaTrader is free. It's free to use.
Okay.
So that's why we've been using NinjaTrader since 2006. We started using it for day trading, so we have a licensed version. But once we stopped day trading, well, a long time ago, we just use it for analysis, and it's great for analysis. It is the best for analysis.
Which one you said? NinjaTrader itself, right? Or
Right.
it's a different?
NinjaTrader.
Okay.
So this is NinjaTrader.
Okay.
So
And the second,
and we will give you all the charts and everything, workspaces all set up, ready to go. So you don't have to do anything on your own.
and one last question is,
Yeah.
since we are not doing day trading,
Absolutely not. No.
yeah, so basically then we will have to keep the margin requirement also in mind, right? In that case.
That's correct. So
Okay.
you got to always be aware of how much margin you have in your account. You don't want to go over. You don't want anything being shut down. Always allow for overnight something to happen where margin might increase. You always factor in a little cushion.
Yeah.
Always factor in, because one of the biggest margin increases we ever had back when we were trading was in 2008. The margin on the Russell 2000, when we were trading the Russell futures, I think it was TF, the margin at that point in time was $4,000, $4,500 per contract. That was the margin at that point in time. Overnight, it doubled to $9,000 overnight because of market volatility. It literally doubled overnight. So be aware that type of stuff can happen. Okay, margin can change. So always have some extra cushion. NinjaTrader better than Thinkorswim. Those are two totally different purposes. Thinkorswim, you cannot do this analysis on Thinkorswim unless you know how to program everything you want to do. Thinkorswim has its benefits and purposes. Is great for your trading and execution. NinjaTrader is meant for this type of analysis. If you want to make this work in NinjaTrader and Thinkorswim, great. But it's more than just one chart we do, and none of those indicators exist in Thinkorswim. They do not exist. You would have to literally create them, which means you have to know how to do it. Same thing in TradingView. If you know how to program it and create it, great. Otherwise, pull up NinjaTrader and open a chart. There's nothing to do. I give you all the charts. Just open it and look at the charts. If you have the programming capabilities to create stuff on your platform, then yeah, you can create anything you want on your platform. If you have the programming capabilities, not just pull up an indicator. Yeah, they have to have the indicator, but you have to be able to program it to look the way we need it to look. Most people I know don't have either the programming skills, or the platform doesn't give you the access to be able to do that type of programming. Thinkorswim does, but you got to know what you're doing. Automation question. Can you show us how to set up a cancel order to be automated? I can't do this here and now, but it's usually a standard order form. Hang on. If I cannot show you that now, because as of today, I don't have a platform for trading that I've ever used before, because today was our switch from Schwab from the Schwab platform we've been using to Thinkorswim, and I've never, ever traded on Thinkorswim before. So today is going to be the first time I'm actually trading on Thinkorswim. So I can't show you an automation question because I don't have enough experience with the new platform to show you anything. But it's literally just enter one trade and cancel one, transfers other. I plan to actually use the web platform. Hang on a second. I'm actually using a brand new platform to trade starting today. because we had to move from Schwab to Thinkorswim. It goes into effect today for futures. But it's all done in one order. One order is the entry, triggers the target. Hang on a second. Continue. I'm gonna actually pulling up something. I'll switch over. If this works for me, I'll switch it in a second. And trade 6A. Okay. Let's say let's report trade. Let's report on this chart over here. I'm going to actually switch back to the handout. I'm going to go through some numbers because someone asked me about profitability, so I want to go through that so that you understand that in a second also. But position is working. Okay, I'm going to pull up. So I'm going to change to share now. Okay, this is a Thinkorswim platform, which is on the new Schwab platform. I'm not doing the download desktop deal. I'm actually on the website. There's a web trading platform. This used to be totally garbage way back when. I mean, totally garbage. It was useless for anything. But over the years, they have improved on it so much. This is what I'll be using starting today because all futures trades at Schwab have been transferred to Thinkorswim effective today. So all my futures trades will start here. So when I search for the symbol I want, slash HM. So I find the symbol I want, sell, and you have all these different advanced orders. This is the same as first triggers OCO. Okay. So here's my initial order. You can buy or sell, go short. Using the same example we had, sell 15 contracts or whatever number. Let's make it. Sell 15 contracts, buy one at the target, which is the limit order. This is GTC, good till canceled, good till canceled, good till canceled. So I sell one and I put in the price I want it to sell one, stop, and I put in the price. My stop price. Sell one contract, the entry stop price, buy one at my target price, the exit, and buy one at my stop loss price. That's it. It's entry, target, stop. So when this one is filled, it will trigger the one cancels other. That's your order. It's that simple. So this is actually the web platform, and I find the web platform very straightforward, simple, easy to use. So this is what I'll be using is the web platform on Thinkorswim to place my futures trades. It's real simple. I mean, sell, buy, click on one advanced orders, first triggers OCO, and sell for the same type of trade, sell a number of contracts, and put in the stop loss, the stop value to enter the trade, good till canceled, buy, target price, and stop loss price. That's it. So that's the example there. Okay, I'm going to now take a look at what I was going to do is go with some numbers, and then we're going to wrap it up in a little bit. So it's actually pretty straightforward. And let's see, spreadsheet, share. This is the most important thing I want to let people know about making money, is having a big picture viewpoint, knowing what to expect. So I had asked Becky to assemble this spreadsheet going back at least 5 years worth of all the trades valid on our different strategies and show the what if scenario. What if you risked about $1,000 in every trade? What is the approximate profit and loss? It'll never be exactly 1,000, but it'll be plus or minus. This gives you a feel for it. So everything, all numbers you see here are going to be based on $1,000 being risked and the lowest worst case scenario profit. This is worst case scenario. There is better case scenario that you can make more money, but we always show you the worst case scenario, okay? And this is based on 25 grand account where we're risking 4% of the account, not trading anything else. We're just trading this strategy only with 4% account risk. Usually it's 2%, but if we're only trading this and nothing else, then we can actually have a higher percentage risk per trade if this is all we're trading in it. So all the percentage is going to vary on what you trade in the account. But let's say this is 4%, $1,000. Okay, you start over 2019, the month of January, not a great month. You end up with a negative percent on the return for the account. You might have been someone who started trading in January and you get discouraged because you place a bunch of trades and all of a sudden you come out negative. You get discouraged and you stop trading. This is what happens to a lot of people. They thought they bought into the best plan ever. They go to trade and all of a sudden losses, and it's like, I stop. You are guaranteed beyond any of a shadow of a doubt, you will have 2 to 3 losing months every year. Those 2 to 3 losing months will be negated by 2 to 3 winning months every year. The remaining 6 or 7 months of trades will be your profits for the year. You have to have that big picture viewpoint. Question: Are your proprietary strategies on NinjaTrader provided? These are our strategies that myself and Becky developed, all of them based upon many thousands of hours of learning and experience. All the strategies are strategies we created ourselves based on knowledge gained from trading, based on knowledge gained from dozens of people we've learned from. Okay, so month of trading, negative. Okay, second month, February, we had 4 trades. It doesn't mean we only had 4 trades. It means these 4 trades filled. We could have had some other trades that did not fill within 2 days and they got canceled, okay? Because we don't get into trades going in the wrong direction. It has to be actually going down to get in short or actually going up. We don't want to have fake out. That's why we do buy stops and sell stops. Well, guess what? This month negated that month. Boom, just like that. 4 wins negated our losses. Next month, 5% return, 0.7% return. This is 2019. As we keep going for the year, at the end of the year, we had a 40% return on the account. This could be a 10 grand account. This could be a 25 grand account. This could be a $100,000 account. This could be a $500,000 account. 40% is 40%. The only difference is you trade more contracts. Instead of trading micro contracts, you trade full-size contracts. This is very scalable. Okay, so this works in any size account. I note we don't do December. We do not do December trades. Okay, December sucks. We do not trade in December. Trade in December, you're going to give back a bunch of money. We do not trade in December. In December, we focus on our option trades, not futures. Do not trade December futures. Trade options in December, but not futures. It just creates losses. So we do not trade these strategies in December. January, great month. February, March. This is 2020 now. Remember, this is when everything shut down. 2020, when everything shut down because of COVID, was literally my best, most profitable year of trading in both futures and options. It was the best year of trading. I had nothing else to do but trade. That was my only income that year, trading. Trading was great, okay? Best year of trading because the strategies work. Okay. It doesn't care what's going on in the world. The strategies don't care about your politics or diseases or anything else. They work. At the end of the year, 2020, nice trades each month, nice returns. End of the year, 2020, 65% return on account. People want to double their account. You don't double your account by gambling. You up the percentage risk. Instead of risking 4% of account, if you risk 5 or 6% of the account, then this number, then you make more dollars and cents. Okay. You take the exact same trades with a little bump in the percentage you're risking per trade, but you don't take new risk. It's just a matter of percentage. You have to trust the strategy. A month with a whole lot of trades in this April came out net, basically break even, but in the last week you gave back a few dollars. You made money, gave it all back. If this was the month you started trading, you'd feel bad at the end of the month. You just made all this money up to here and then you gave it all back. Guess what? Welcome to trading. That's the way it is. That's why you have the big picture view. Once again, you take your trades when they're valid. And the next month, you're going to make it all back and then some. End of the year, 59% return on account. Money adds up once you follow a plan. You're seeing why we love currency futures. There's index futures also, but currency futures by themselves is the best, most profitable, most consistent, everything. One bad month, big deal. Next month, it's 2 back-to-back bad months. This is what when people stop trusting the strategy, to trust, they stop trusting in me. They stop trusting in, and they stop trading. And then I hear from them like, you gotta trust the methodology, trust what I'm telling you. Keep trading. Next month, you basically negated the previous 2 months combined. That's the way it works. You got to keep trading. 1 month negated the last 2 months combined. End of 2022, 44% return because you're always consistently placing your trades. Trust the strategy. 2023, 58% return. Okay. You won't be exactly this, but you have the feel. You won't take every single trade. It won't happen. But you'll be in the right neighborhood. You should be in that plus 50%. You might miss some trade, even if it's 40 something to 50% return. That's great. You won't be in every single trade. It won't happen. But you know you're going to be making money as long as you're pretty consistent. And here where we are right now in 24. That's how we trade currency futures. We don't need a lot of trades. We need quality trades. This is the evolution from when a lot of people start to take a bunch of trades to getting really focused. And so this is what myself and Becky, we teach you how to trade. I do anything you see in rectangular boxes, Becky did that. I don't put stuff in rectangular boxes. Becky is a data manager. I mean, she manages all the spreadsheets, all the numbers, all the everything. I work with people one-on-one, show you how to trade, show you how to do everything you need to do to get to this point. But the goal is what you saw me do on these spreadsheets. That's the goal. Okay, that's what I focus on. And the strategy like what I just showed you, those same type of strategies, we have 3 approaches, trend lines. So anything you see here that says TXD, those are trend lines, or TNT are trend lines. So TNT and TXD are all trend line strategies. The double D swing is the one where you go up, down, then up above that previous level. Those are that type of strategy, retrace and new highs, or going down, go down, up, then down again to new lows. Those type strategies are the snapbacks where you're in a bigger time frame, pulls back, and then snaps back into the bigger time frame. Those would be the squeeze plays. So you see some that say squeeze play. It might be one other one. So the stochastics one. So this is one of those type of snapbacks. Squeeze play, the snapback. So that's what that is. I want to switch over to on the handout. We'll end up going longer than we really want to, but so you got a couple examples on the handout of those dates. Here's a listing of all the Aussie and Canadian dollar trades that have happened since 2003. So if you're going to be developing this on your own, you can use these dates as reference so that then you can see if what you're doing lines up with these trades. So if you're programming something up on your own, these trades should all be valid on these dates. And the win-loss out should all, if you're doing it on your own. If you're doing it working with me, I work with people one-on-one and one-on-one only. I do not do groups. Everyone's different. I might have to say something 3 different ways to one person for them to get it. I can say something to the whole group, and some people don't, it will be lost. They won't understand it. I might have to explain it to one person one way, someone else a different way, based upon their personal backgrounds and experience. So that's why I do everything one-on-one. Is going to be at least 10 strategies combined for we do index and currency futures. The index futures are okay, but nowhere near as profitable as the currency futures. So you learn index and currency futures, but I focus primarily personally on the currency futures, since they provide the best returns. I usually I expect you to commit to at least 6 months of trading the strategies, to really learn the ins and outs and to see the numbers work out, to make your mistakes. Make your mistakes in the first month or two, and then we'll get rid of those. But you make your mistakes early on, and then we just keep fast forwarding from that point on. After about 6 to 9 months, you should have this down and be confident, because you might have a couple of losses along the way, but you have to, like I showed, when you have 1 month with a bunch of losses, you got to be able to see the recovery from those losses and how it all works out number-wise, and it's not a big deal. But you have to work through that. That takes at least 3 to 6 months of consistent trading for that to happen. Do everything. If you're in the Bay Area and you want to meet in the South Bay, I will meet you in Santa Clara. If you want to travel to the South Bay, I can meet you in person here, or we do stuff via Zoom, and I'm always available via phone and email for day-to-day, minute-to-minute type stuff. I've tried to validate anything you have questions for, you need someone to talk to. And I help you get through your first set of trades, get your trading platform set up, get your analysis platform set up. The analysis platform, NinjaTrader, I will get that to you. I will hand you the workspaces all ready to go. So you don't have to do a whole lot of programming on that. Just have to look at charts, because NinjaTrader is easy to look at charts. If you have programming skills, you want to set it up on different platforms, it's up to you. And then, but NinjaTrader is easy, ready to go, and it's free to download and to utilize. We always end up going long. I thought I'd only do an hour this evening, but it always ends up going longer than that. Do you have any questions? Because we're going to have our next meetup probably in about 2 or 3 weeks. It'll probably be on options. If you're interested in working with me on futures, like I said, I'm very flexible during the week, on mornings, afternoons, and evenings. I have a really fluid schedule. Trading is one of the things that let me leave my full-time job back in 2009. So I have a pretty flexible schedule. I do a lot of, I train in jiu-jitsu. I am part of city government here. I work on films and commercials and stunts part-time. And I just do a lot of different things at different companies. I teach fitness classes. I have different corporate places. I'm at Apple, I'm at Google, Intuit, Adobe, and different places I go train. So I have a very flexible, fluid schedule. So if you want to work with me, I'm a very flexible afternoons, evenings, and mornings to work with you one-on-one, depending on your personal schedule, and no set number of time. If it takes, some people it takes a month, some people it takes 6 months, some people it takes years. I don't really put a time limit on this stuff. Everyone's different. So whatever you need, I'll try to help you. We also have a Facebook group that people can meet and communicate on. And for anyone on the meetup, I will take $100 off this value. Let me know by Wednesday. So it'll be $16.45 up until Wednesday this week. And we can start pretty much almost anytime in the next few days. Just let me know, and then we can start planning accordingly. I'll give you a checklist of things to do to get ready. Also, I will give you a little bit of homework, because I want to make sure we're talking the same language. So I'll give you a few things you need to watch, some videos to watch first, some webinars to make sure we're on the same page with some terminology, and then we get right into it. But it is pretty much just like you see. Is it that easy? Yes, it actually is. That's why we like futures. It's exact. It's predictable, and we can plan income around our accounts and what we do, as long as we don't make a bunch of silly mistakes. And if you make mistakes, let me know and let's fix it right away. But it's pretty much just as you've seen. Do we have any questions? All right. Looking forward to seeing you guys in the next meetup in maybe 2 or 3 weeks. It might be options, it might be futures, depending on what kind of feedback I get. And also let me know if you want to work with me on futures trading. We can start on the strategies fairly sometime in the next. Payment plans? No. The reason for not payment plans, but I have to give you all the knowledge now. So no payment plans. I can't give you the knowledge in pieces. So you got to have everything available to you to trade everything. So I can't hold anything back. So for coaching clients, there's more than what I've shown. Okay, there's more. And for the people who are my clients, anything that's coming up new, you get that. So as we evolve, you evolve with us. Okay, so as always, so as we do more strategies, different things, you just get it. And I email this out to everyone every day. So you're not on your own. I email the trades to you every day so you can compare what you found to what we found. So you're not out there on your own. For the first 1 year, I will email you the trades every single day so that you know what we found valid. So that helps you develop and grow. All right. Ruben, you mean how big an account? For futures, if you figure low end five grand account would be great to work with. A $5 grand account is easy to start with. And like I said, for the futures, you're trading micros, so it's not a big deal. So if you have a $5 grand account, we can trade with the micros and be very comfortable. And then once you feel more comfortable, you start adding to it. But $5 grand account is going to be minimum for the micro futures, and then you can do a pretty good job with those. Well, and we stick with currencies. Oh, by the way, there's something I was going to almost forgot to mention. I'm going to show you real quick. I'm going to change this chart over. Almost forgot, but everything we went over today. This is something you can look at on your own. This is Aussie dollar right now, and it's valid this weekend. Oh, just saying. Okay. This is valid right now on Aussie dollar. And I am placing a trade on Aussie dollar this afternoon on my new account on Thinkorswim, just the way. So what I showed you before with that screenshot, that's the prelude to what I'm going to be doing after we end this meetup. That's the trade I'm going to be placing with the entry, target, stop. So this trade is valid on Aussie dollar, 90-something% wins. And I'm also going to be placing a trade on Canadian dollar. I think we have a similar type of deal going on, or one of these deals. I don't know if it was Canadian dollar or something else. Was it Swiss franc? Swiss franc? It was something. Not sure. I think there was something else. I'm not sure what. I'll take a look at it. But definitely Aussie dollar. There were multiple. There were 3 sets of trades valid. Not just this one. There were 2 other short strategies valid on 4 or 5 of different currencies. So I'm placing a trade. This one is on Aussie dollar. I'm going to be placing, plus a couple others on another one on British pound and one on Canadian dollar for different strategies. So, but it's the same as the TNT 52 sell, valid right now this weekend. So I am placing this trade. So Olga, I know you have this strategy. If you want to put a small trade on, may not be a bad idea. At least a small trade, because I know you have the strategy. But this one is valid. All right. If you need to reach me, you know how to contact me. The handout has my phone and emails. And I don't know what US dollar is going. I have no idea. Don't think about US dollar in any way, shape, or form. Don't look at it. I just look at all I look at is what I look at here. I don't care what US dollar is going, because US dollar versus many other things. So it is what it is. I just focus on what I see on the chart for Aussie. And Aussie has a sell signal with 90-something% probability of success if I enter the trade. That's all I care about. I don't try to correlate with anything else. I used to do that once upon a time. I used to actually follow the US dollar, the dollar index futures, but that's on a different, you have to, now they charge you money to actually, I used to trade a dollar index, but I don't do that anymore because they charge you money for it to actually access it, the data. All right, anyway, this is valid right now. And so that's what I'm going to be doing as soon as I end this meetup. And like I said, if you want to work with me, just contact me, email me, call me, or message me on our website. Oh yeah, and if you haven't been to the website, may want to go check it out, behindscenes.com. Here's my homepage. This is a podcast that I did where I was interviews, good one to check out. And here are the win-loss status for the trades and the handout, and also all the coaching prices and everything. Email me if you're interested, and I can, the discount is not on here, so I have to send you the discount. So I will send you a invoice from PayPal. It'll be coming from PayPal with $100, so $100 off this price, and then we can get started as soon as you want to. The number, I only work with one, I don't really work with more than 2 new people each month. I really don't, because I need time and I want to have time for myself. I'm not looking for a job, so to speak. I like having time to do different things, so I really I don't do these more than once a month. So I don't take on more than 1 or 2 new coaching students each month. So my time has to be committed to that 1 or 2 people each month. And usually the first month or 2 is when we spend a lot of time. Then after that, it kind of drops off as people start doing their own just consultation once in a while as needed. So 1 or 2 people a month, but let me know by Wednesday the latest and I'll give you the discount. All right. So until next time, we'll probably do options in a couple of weeks. We might do futures depending on feedback I get. And let me know what you want to meet on. All right. You guys have a good day, and I'm going to watch a little basketball this afternoon. All right. Until.